Hello, this is Dean Kernut, and welcome to the Alpha Exchange, where we explore topics in financial markets associated with managing risk, generating return, and the deployment of capital in the alternative investment industry. Welcome to a special Alpha Exchange retrospective podcast in which I highlight discussions with female guests and their reflections on efforts to empower careers for women in the field of finance. I launched the Alpha Exchange back in 2018 to host conversations with prominent investors, strategists, and policymakers that explored the world of market risk. Over the course of these last 5 most interesting years, I've been fortunate to engage with 135 individuals, soliciting their perspectives, uncovering their frameworks, and asking them to detail the lens through which they evaluate the trade-off between risk and opportunity. Among my guests, 22 have been women. I'm pleased to say that 2023 is already a record year for female guests at 9. These guests are chief investment officers, heads of derivative strategy, hedge fund founders, heads of asset allocation, and macro credit research. As with my discussions with male guests, Alpha Exchange podcast featuring females focus on topics like implied volatility, hedging, positioning, portfolio construction, the search for diversifying assets, and of course, inflation and the Fed. These women are steeped in the math of option pricing, in technology required to run a systematic strategy at scale, in factor investing, and in public policy. Through conversations with these prominent women, I've also solicited their views on change in both the buy side and sell side, exploring the impact of technology, of work from home, and of this new thing called a 5% short rate. Female guests of the podcast are, almost always, mothers. Those in the business of Wall Street recognize its demands. Overlay the sacrifice and significant responsibilities that come from being a mother on top of a stressful, demanding career, and I personally am left a bit awestruck by how successful these women are. My discussions with female guests are no different from those with male guests. My aim is to bring to life the thought process each guest utilizes in making heads or tails of the set of market prices on hand, judged always against the uncertainties we are paid to consider. How did you arrive at your framework, and what or who was influential in establishing this risk philosophy? What measures are on your dashboard of indicators, and are any flashing red or green right now? What can we learn from history? It's been a pleasure over the last 5 years to have the opportunity to engage with these very accomplished women, learning about their specific areas of expertise. At the back end of these discussions, I've often asked about the state of affairs in what we can call the women in finance movement. We all know the degree to which the investments field has been male-dominated. There are industry-wide efforts to even this out, and I've asked my female guests to share some of their perspectives on how things are going. What initiatives are falling flat and need a restart? What's working and why? What are you excited about? What help do you need? What follows is a short retrospective bringing in some of the feedback to this question. I learned a good deal putting this together and have sought to synthesize the feedback. My hope is that work like this, highlighting perspectives from women on the front lines of risk-taking and security evaluation across both the buy side and sell side, will serve to nudge the important cause further. Between 2018, when the Alpha Exchange was born, and today, so much has happened, much of it very challenging. We've had to make adjustments to our daily lives. Fortunately, on the business front, we've been able to incorporate and leverage Zoom. But we should remember that children were also asked to engage in, quote, remote learning, sitting in their rooms at home during the week. This added responsibility of supervision most often fell on the mom. There have certainly been benefits derived from newfound flexibilities in working from home. A theme that emerges from the thoughts shared by female guests of the podcast is that employers have become more flexible in the post-pandemic period. While this is likely welcomed by all, it appears especially helpful for women who are often left juggling work and family responsibilities. Work from home has been a lot easier for those established in the industry versus those who have less experience. For those in the early stages of their careers, mentorship is critical. And because this process of learning is much more effective in person than on a screen, the post-pandemic period has certainly made mentorship more difficult. This issue is compounded for younger female professionals given the underrepresentation of women at senior levels on the markets, banking, and investment management sides of the business. Let me take a moment to set the stage with some data. Although asset managers have made some progress in recruiting more women for junior roles, they have not made as much progress in promoting them to senior roles. Only 12% of the top ranks of private equity firms, for example, are made up of women, according to Preqin. Barclays reports that less than 20% of roles in sales and trading are filled by women in the industry. And, according to Morningstar, only 11% of fund managers in the U.S. are females as of the end of 2020, a percentage that has remained unchanged for the past decade. Individual funds that are managed only by women dropped to 2% in 2020 from 6% in 2001. Let me provide you with some further stats. In 2019, the Deloitte Center for Financial Services reported that only 6 out of 107 financial institutions in the United States had a female CEO. 4.9% of partners currently occupying senior roles in venture capital firms are women. In private equity, only 10% occupy senior roles. Globally, within financial institutions, women held 21% of board seats, 19% of C-suite roles, and only 5% of CEO positions. From a glass half-empty lens, these numbers don't look all that promising. There's no doubt plenty of scope for improvement. But as I observe women in the industry that have reached the highest level, I'm encouraged. Let's start with Janet Yellen, both the first female to head the Fed and the United States Treasury. Lael Brainard, now only the second female head of the National Economic Council, was also just the second woman to serve as vice chair of the Federal Reserve. Brainard had a prominent voice on the Powell Fed. Currently, there are 6 female FOMC members, including alternates. In Europe, Christine Lagarde is head of the ECB. She was formerly head of the IMF, a role now in the hands of Kristalina Georgieva. Geeta Gopinath, an accomplished economist with a PhD from Princeton, serves as the first deputy managing director of the IMF. As I am taping this podcast, I can't help but think back to the calamity that beset the U.S. financial system 15 years ago. It was November 20th, 2008, when a new all-time high in the VIX of 81 was reached. We can recall a month prior when U.S. Treasury Secretary Paulson summoned the Wall Street CEOs to Washington, a veritable who's who. Jamie Dimon, John Thain, Lloyd Blankfein, and John Mack among them. There wasn't a single female in the room, lest one, Sheila Bair, the head of the FDIC. Today, we see not just a greater proportion of females in policymaking positions, but also in hedge fund founders and the C-suite. Leda Braga spun out of Bluecrest to launch Systematica, a quant fund in 2015. The firm manages more than $10 billion in assets. More recently, Malagonkar's Sergo Cap Partners started trading in 2022 with $1.8 billion under management, the largest debut of a women-led hedge fund in the industry's history. Divya Natimi, a former Viking Global Investors portfolio manager who oversaw more than $4 billion at Viking, has become the first woman to launch a hedge fund with more than $1 billion of commitments, according to a report by the Indian Express. And in the investment bank arena, Jane Fraser took the helm at Citibank in 2021. Adina Friedman is the CEO of NASDAQ, while Lynn Martin is president of the New York Stock Exchange. There are some promising developments with respect to female careers in financial services, but no doubt there remains plenty of work to be done. With that, let's hear some of the perspectives shared by female guests of the Alpha Exchange. Let's start with Natalie Texier-Guillot, the co-head of global equity sales for the Americas at BNP Paribas. You are probably aware that complex derivatives are deeply entrenched in the DNA of French banks. U.S. banks are looking at vanilla puts and calls, while their French counterparts are structuring autocallables, options on dividends, worst ofs, and many kinds of dual underlying derivatives. While steeped in this esoterica, Natalie has important views on how women in the early parts of their careers can advance and what resources can be instrumental. She says this.
Well, I think we talk a lot about mentorship and sponsorship, and I think both are very important, especially for females, but they're still quite different. I think they both can greatly help your career, but in fact, I think the sponsorship is even more crucial to ensure that you have a successful career. So on the one side, you have mentorship. It's very important, I think, when you start your career and a young professional, you need some kind of guidance, and having a mentor can provide you with some perspective. And I think it will help you understand and navigate better the organization you are in, also understand better maybe the unwritten rules. And again, the mentor will help you to recognize your strengths and your areas of development. So I think mentorship is key, especially for young professionals, and it could be very impactful as you grow in your career.
I did a bit of reading up on this idea of mentor versus sponsor, and we will see the distinction drawn again a bit later. Simply put, a mentor is someone who shares knowledge and provides guidance. A sponsor is someone who proactively promotes growth, provides access to opportunities at work, and/or advocates for career advancements. Seems to me that asking for both is not unreasonable. None other than the Harvard Business Review took up the question, quote, "What's the difference between a mentor and a sponsor?" They say the following: most of the time, the mentor is older and the mentee is younger, perhaps new to the workforce, but mentorship can exist and thrive in any situation where a new employee is learning from a more experienced one. Contrary to what one might assume, a mentor does not have to be somebody in management. In fact, people who aren't in management can derive great satisfaction and sense of contribution from mentoring someone else. And how about sponsorship? The Business Review continues, quote, "Sponsorship stems from a strong and successful mentorship. Think of it as phase 2 of mentorship. Once the mentor and mentee have worked together for a while, usually at least a few months, the mentor may see evidence of growth and self-accountability in the mentee. At that point, the mentor can become an actual advocate for their mentee. In this capacity, the mentor is now a sponsor and the mentee is a protege." Now, the sponsor is doing more than just sharing experience and knowledge. Because the sponsor has come to feel personally invested in the advancement of the protege, the sponsor expands that person's visibility within the organization, models self-advancing behavior, and directly involves the protege in experiences that will provide opportunities for career advancement. One aspect I have really enjoyed about engaging female guests is asking them for recommendations on who I might also invite to appear on the Alpha Exchange. Natalie was kind enough to introduce me to her former colleague while at Citibank, Anna Raycheva. With a degree in math from Princeton, Anna rose through the ranks at Citi, ultimately heading the strategic trading desk before founding Sonia Capital in 2016. After a discussion about how Anna navigated the GFC and on the systematic process she now uses to deploy a global macro strategy, I asked whether she saw progress in advancing female careers on Wall Street. She was optimistic.
I see progress, I have to say. I think it's a great time to be a female professional in the industry. There's awareness and willingness to create more gender equality. And there are also many successful role models. So for young professional women, there's always a question, well, can it be done? Well, there are enough role models to demonstrate that can be done. Again, as a percentage, they're not huge, but they are. The role models are there. I also, what I've observed over the years, diversity has been, for the large banks and money managers, they've been working on the diversity issue pretty much for the past 20 years, if not more. And I think they're beginning to see the results of those efforts. Most organizations have programs to mentor and support young, diverse talent through their ranks. And somebody has an opportunity to join one of those organizations, I'm fairly certain they're going to have a very good experience.
Because she has experience on both the buy side and sell side, Anna added this:
"It's going to take time. It's not going to happen overnight. But even on the investment side, I see there's a lot of willingness from different participants to make a difference there. I'm optimistic. I'm very optimistic."
I like to say that, quote, "optimism is half the business plan." It's encouraging to hear women like Anna express a sense of hopefulness in the effort to expand opportunities for females in the investment business. Tanya Reif, a PhD in economics, is someone who has spent much of her career studying episodes of currency crisis, something that she has observed firsthand. I, too, am fascinated by market volatility events, and it can easily be argued that there's nothing more destructive than a country's money system blowing up. At the back end of our discussion, I solicited Tanya's views on the progress of efforts aimed at empowering female careers in finance. Like Anna, she had a similarly positive take. Tanya said this.
I think I'm very happy to see women are continuing to make progress in the industry. There is more and more opportunities for women, certainly at the junior level than when I started out. I think there's plenty to go. I think the more women that take an interest in the field and are giving the chance to move forward, I think the better we're going to be for it, and the more diversified the funds are going to benefit from cooperation of more senior women in the field.
Tanya notes that progress takes time and advises women entering the field to be patient. She says,
I think it's very hard for a quick progress to happen because normally the field wants to see proof of returns, of track records, and trust is very important. So it takes time to build. But I think it's encouraging that there is more and more opportunities to do that. I think my 2 cents for women out there is to be patient, to be persistent, to be flexible, and to just keep at it, keep trying. There's different avenues that open up, and we're going to see more and more women continue to flourish. So I'm very excited about the future. I think we're going to continue to see a lot of progress in that area in the very near term. There's a lot of pent-up talent waiting to be given a chance.
When Tanya and I did this podcast together, she was a global portfolio manager at Alphadyne. She has since gone on to found Senda Capital, a firm focused on digital assets. And speaking of crypto, I had Mike Novogratz, founder of Galaxy Digital, as a guest on the podcast. As an aside, I can't help but preview a quote I'm going to use as part of the soon-to-be-released 5-year anniversary episode of the Alpha Exchange. When I asked Mike about learning experience from market crisis events, he said that at a certain point, quote, a crisis will unwind at a pace that it wants to. I love this because it properly implies that market prices themselves can become so unwieldy as to be impervious to efforts to stabilize them. But I digress. Mike had done a podcast in which he appeared as a guest alongside value investing legend Bill Miller in July of 2020. I found it really interesting to hear Bill's take on Bitcoin, an unproven asset whose financial properties didn't seem appealing to an investor drawn to studying cheap fundamentals. I mean, price to cash flow is not a metric one hears often in Bitcoin circles. In the process of reaching out to Bill, I was connected to his protege, Samantha McLemore. The founder of Patient Capital, Samantha shared lots of wisdom on our podcast about her process for finding opportunity on both the long and short side in equities. She also had important thoughts on women in finance.
I'm very passionate about this topic, and you're right, there's not enough representation of women. We're a minority. I think 9% of U.S. fund managers are women, and only 1% of assets under management, I think, are managed by women and minorities. So there's a long way to go here. I mean, it's great news that there seems to be so much interest in this topic. So that's fabulous. And to the extent people are focused on it, there's a lot of areas for improvement. And it seems like a lot of people are trying more stuff and trying to figure out how to move the needle here. So that's great. Again, I think there's a lot of interest and actions coming along. There's more that we could do there and more that can be done there. And there's just so many interesting things that fall out of it.
Like other female guests, Samantha also expresses a fundamental and sincere passion for the business. When you like what you do, it's easier to work harder. She says,
I think the markets are a great area for women overall. The great thing about markets, well, I love that you can learn all the time and that it's always changing. So it's so intellectually stimulating. And there's objective results. And so it's not up to someone to decide how you're doing. You get quantifiable, immediate results daily, which maybe it'd be better if it wasn't daily. So you can really know how you're doing. Others know how you're doing. So that really levels the playing field, I think, for everyone.
Erin Brown is the head of asset allocation at PIMCO. We connected for a podcast in March of 2021. We were just a month or so post the meme stock episode. The 10-year note sat at 1.5% yield. The MOVE index was about half its current level. And it's likely the case that Powell was still not even thinking about raising rates. In addressing my question on the state of the women in finance movement, Erin makes several points. First, she states that she believes that financial markets is a great path for women from a career standpoint. She notes that she personally has a lot of flexibility, but this has been a luxury she's been able to enjoy as she's matured and taken on more seniority. She adds, quote, "Certainly, since 20 years ago when I started on Wall Street, I think that analyst programs across investment banks have done a really good job on the junior level, attracting, developing, and retaining talent in the analyst and associate programs. And the market and the industry has been really focused on those junior level talents coming out of undergraduate and MBA programs. While asserting that efforts to attract females to the industry have been successful, she sees work to do on the retention front. This certainly has come up a number of times in my discussions." Erin says,
"What I think the industry still has to work on is the retention, development, promotion, really developing equity at the more mid-level and senior level of women's careers. And I think we still as an industry lose a lot of women as they get to that VP level when they're in their early 30s. And maybe they have competing interests from an interest perspective that's outside of finance. And we tend to lose women at that critical juncture in their career. And so I think that over the next 10 years, what I'd like to see is more programs, more of an effort by the industry, really focused on retention and development of that mid-level career employee, particularly women, but of course men as well. And I think that's going to be really critical to developing that senior level of talent for women in the industry.
During some portion of my opening remarks for this podcast, I mentioned the pandemic and its seismic impact on how we work. "You're on mute" might have become the Time Magazine phrase of the year for 2020. Zoom video calls were thrust upon us. Undoubtedly convenient, and in the case of 2020, a necessity, remote work has played a role in reshaping corporate culture. With this in mind, Samara Cohen, Chief Investment Officer of ETF and Index Investments at BlackRock, shared this.
One positive thing about the pandemic is that the interaction we had with each other in a distributed work from home environment was very democratizing. And in a lot of ways, we saw participation in meetings from people who had a harder time getting into the conversation in a crowded room or in two rooms connected by video conference. So the back to work period and the pandemic period have given us a lot to think about around inclusivity at work. How do we ensure people have voices? How do we bring the same intention to our own teams and our own talent strategy that we do to our work in the markets? And from a gender diversity standpoint, I'm really proud of what we've done.
But Samara notes as well some of the unique challenges wrought by COVID, specifically for women as they juggle between the demands of a career and those of being a mother. She says,
"I'm worried the numbers are a bit scary. If you look at what's happened over the pandemic, the number of women who are saying they now want to take some time to downshift in their careers or leave their jobs. I think it's been hard parenting in the pandemic. And for me, wondering whether I was at home enough before, and now that I've been home and seen that there are places that I could help my kids and be helpful to my kids, or maybe I wasn't around enough. I think it's going to be an important period of time adjusting to the new normal and supporting parents and women in particular in that."
In a May 2022 piece entitled "Working Moms in the U.S. Have Faced Challenges on Multiple Fronts During the Pandemic," the Pew Research Center reports that working mothers were more likely than working fathers to say they felt like they could not give 100% at work. Further, women were more likely to say that they needed to reduce their work hours. There's another great question in this survey pointing to the difference in perceptions among husband and wife with regard to who does what at home. While only 34% of men believe their wife or partner does more at home, 59% of women say otherwise. Work from home may save on commuting time and, as Samara argues, help make office interactions more inclusive. It does, however, also impose new responsibilities on parents, which very often fall on mothers. In this context, Mimi Duff, head of the New York office at GenTrust, shared this.
I mean, at the end of the day, we're people and we're not just machines. And when you bring little people into the equation, somebody has to care for them. And to the extent that companies can become more supportive of life's transitions, I'm part of the sandwich generation, and looking after aging parents is also can be challenging. To the extent that companies can just be aware and more supportive, not just for women, but also for men.
Mimi also points to her experience at a hedge fund that didn't have paid maternity leave, a policy shortfall that the senior partners might not have even been aware of. Once alerted, a study was done and a policy change was initiated. Mimi's conclusion, quote, "When you know better, you do better." That concise sentence encapsulates my own goal in doing this podcast, to play a small role in raising awareness of the women in finance cause. Amy Wu Silverman, the head of derivative strategy at RBC, shared this.
What has been the most gratifying for me, and I'll speak to this just from an RBC perspective, is my oldest daughter is almost 9. So when I had her, when I was at RBC, certain policies were in place, and then a lot of the senior women fought for those policies to be better. So longer maternity leave. This sounds silly, but we lobbied to get a Bloomberg terminal in the lactation room because a lot of women who are breastfeeding are still sales trading and making markets. And we can't stop doing that, even though we have to take care of these things. And what I've always found is that people are really open to making positive changes. They just wouldn't necessarily know what those changes are. If you're vocal about them and bring them to light, they'll really listen. And I found that with the folks I work with. And it's been gratifying to see it paid forward because the generation of women who are on my team now, they have really young children or they're just having babies and they're getting to benefit from changes that we fought for about a decade ago. So that to me is great. Look, I still think there is so much work to be done to get to equal, but things are definitely moving far more in the right direction.
Samara Cohen also points to females being in leadership roles that are within the investment function at BlackRock, stating that the investment team overall is 50-50 from a gender diversity standpoint. Denise Chisholm, Director of Quantitative Market Strategy at Fidelity, was an Alpha Exchange guest in August of 2021 and had important thoughts on the investment implications of gender diversity. Our podcast came during a time of rip-roaring speculation in markets. After detailing her most interesting work on valuation spreads in U.S. equities, when expensive stocks traded at one of the largest premiums to the cheap stocks, Denise shared her views on having more females with a seat at the table. She said this.
Certainly, it's a numbers issue, and everybody knows the numbers. I think we're in the 20% range within asset management of any category of women being represented. And I think it's been that way for quite some time. And I don't think that there's any debate over whether or not we want more diversity. Diversity of thought is very clearly correlated to better outcomes. The worst thing you can do in asset management is have an echo chamber. And the easiest way to get that is to diversify across backgrounds and across genders and across any way you can to have different perspectives brought to the table. I always say debate leads to better investment conclusions.
Joanna Gallegos, co-founder of BondBlocks, reflected back on her formative years at BGI, saying this.
And so I think with BGI in particular, in those days, there were women in positions, very visible positions. Amy Schuldagger is one person I think of because I'm thinking about my young self and my young eyes and what I would see around me. But a lot of representation at senior levels already. And then just to be frank, like all my bosses reported and at the end of the day up into a woman. So I think there was a sense of how to work and foster women. And it's hard to recreate. Again, we talk about the fairy tale BGI days, but it really was like that. So I had a great start. I was very fortunate in that.
It becomes clear that seeing women at senior levels is a source of encouragement. It illustrates that the firm is committed to seeing women advance. And while men, of course, can be both mentors and sponsors for younger female professionals, having women at top roles in an organization can be especially helpful when guidance and promotion are sought after. While Joanna's experience at BGI is somewhat unique, it is a powerful illustration of the impact that female-centric cultures can have on younger professionals. With this in mind, let me share some of the findings from a June 2022 piece from Deloitte entitled, quote, Advancing More Women in Financial Services, a Global Report. Among the results of the study are a multiplier effect in which a, quote, positive quantifiable increase ranging between 2x to 5x of women added to senior leadership levels for each woman added to the C-suite was observed in several locations. That's pretty powerful stuff, illustrating the potential for gains to be compounded over time. Male-dominated locker room-style trading floors of the Liar's Poker days appear largely behind us. From what I can gather, there is no human piranha uttering F-bombs nonstop in the present day. But we shouldn't underestimate that females can become quickly disenfranchised in certain office environments. Karish McCall, head of fixed income quantitative strategy at Fidelity, shared this.
As I've mentored women in finance, and especially young women that join, there are a couple of themes that stand out. And so as I look back, I'm going to try to collect my thoughts. But starting off with how the fixed income floor looked 15 years ago, it's drastically different than what it is today, right? Whether it is buy side or sell side, that unnecessary level of whether it was aggression or perhaps not healthy environment that you would, or intimidating environment that you were around, that has really come down over the years. So when I look at both buy side and sell side, I think people are a lot more rational now. There is little of unnecessary stress vibe. It's about the work. It's very meritocratic from what I see.
Anastasia Amoroso, the chief investment strategist at iCapital, concurred on Karishma's point, saying that she sees a better culture of inclusion and respect. She also sees more women in leadership roles, a source of inspiration for her. Noting some of these encouraging developments, she adds,
I've been in finance for almost 20 years, and when I look back on it, there's certainly been improvements. I do think it is a much better culture of inclusion. It is a much better culture of respect as I look across the industry. We know that a career in finance can be extremely rewarding, but it's also extremely demanding. And other aspects of life, family life, can also be extremely demanding and rewarding as well. But putting the two together and having the managers, having the company culture that supports this life work integration, supports it perhaps through flexibility, perhaps that's how you change it. Perhaps that's how you make sure that the middle also works for women. And the middle stage of the career in finance also continues to attract female talent. So, Dean, I think we've made a lot of progress, but there's still a little bit more to go.
This idea of bridging the middle part of female careers has come up consistently as an area where more work needs to be done. It's why some of the industry-wide initiatives aimed at expanding the networks of females are important. There are organizations like the Bloomberg Women's Buy-Side Network and the Buy-Side Women Mentor-Mentee Network. We are all as good as our industry relationships. Other organizations like Elevate and 100 Women in Finance are among the industry groups focused on empowering females. And there are initiatives that seek to equip female students with skills that translate to a career in financial markets. As part of the Macro Minds charitable organization that I've founded, we have sponsored Rock the Street Wall Street and Invest in Girls, two nonprofits focused on promoting investment literacy and addressing the gender imbalance in the markets business. I'm excited to announce that one of our 2024 beneficiaries will support an exciting organization called Girls Who Invest. Let's round out this retrospective with some thoughts from Amanda Lynham, the head of macro credit research at BlackRock. And I want to come back to this idea of mentor versus sponsor. Here's what Amanda had to say on the subject.
As I look back on my career, I've been pretty fortunate in that in many of the roles that I've had, actually, my boss, her boss, they were all females. I was very fortunate in that I had a lot of great examples, specifically as I was starting out and was more junior, of really strong, helpful senior women to look to. I think my piece of advice for junior women that are just starting in the industry is to really understand the difference between a mentor and a sponsor. And ideally, you want both in your career. So
a mentor is someone who's a bit closer in your experience level, closer in the day-to-day of what you're doing, can really help you become an expert on your space, really hone your skill set, talk to you about best practices, what works, what doesn't. A sponsor is somebody who's a bit more ahead of you in terms of experience, but can really discuss your name in opportunities that you might not be aware of. And we say the person who's mentioning your name when you're not in the room. I think that's something that we can all do, is just make each other better and bring people along for opportunities and give them a chance to demonstrate their expertise and their knowledge and lead. And if we do that enough times, we'll be in a much better place.
Amanda's last comment, that if we do that enough times, we'll be in a much better place, reminds me of the power of compounding. Many outcomes, both good and bad, are the ultimate results of a string of compounded inputs. Progress on empowering the careers of women in financial markets is not a snap your fingers kind of thing. It takes time. Temporal-based compounding, reflected most directly in earning interest on interest, is powerful, and after years of ultra-low rates, set to matter again. But cross-sectional compounding can also have substantial impact. This is the aggregation of effort at a given point in time. With more folks, both men and women, engaged in the Women in Finance movement, the stronger the base of advocacy and the better the odds of long-term success. Pick up a shovel and find a way to contribute. Well, that's it for this special retrospective Alpha Exchange podcast. It's been a true privilege engaging with these highly accomplished females, and I'm looking forward to future conversations. Thank you for listening, and I'll catch you later. You've been listening to the Alpha Exchange. If you've enjoyed the show, please do tell a friend. And before we leave, I wanted to invite you to drop us some feedback, as we aim to utilize these conversations to contribute to the investment community's understanding of risk. Your input is valuable and provides direction on where we should focus. Please email us at feedback@alphaexchangepodcast.com. Thanks again, and catch you next time.